Good morning, everyone. Welcome to this session. Uh, People will keep joining, so we can just start the session here. Uh, Basically, this session is just to interact with you and also just give some updates on a lot of queries that are being raised individually, and then we thought, okay, once we'll have a session so that we can just give upon some of our understanding on certain topics. I hope everyone are into trading.
Yes, and
Yeah. What about others? Anyone who's doing futures and options also?
I'm trying to follow what you're giving on calls and puts, but it's hard during the day when we have work calls and all. So when possible,
Okay.
I catch what you send and then try to execute. Sometimes the timing is not the same as what you did, Gabe.
Yeah. Yeah. What you can also do is you can use your GTC orders, or maybe you can place one of the guy, he was telling me that, since I can't sit 24 hours or during the market hours, what I'm doing is I'm taking an entry as per the price suggested. And, you know, uh, I mean, he's taking little multiple lots, like let's say 3 lots, 5 lots. Then what he's doing is once, let's say he has bought 5 lots, 2 lots he's placing sell order at the first target, and another 2, 3 lots he's placing at second target, and third one, last one also is placing at the third target. And if last target, final target is also hit, all the positions are squared off. In case if it doesn't hit, it goes to zero or it goes into loss. He doesn't have to track it. That is what he was telling. That's, I think, even I was also liking that idea, uh, because we are, many of us, when we try to do one lot, that's a different case altogether. Because when we buy one unit, one contract, then what happens is, if you want to wait for the third target, and that third target doesn't come, your option may get into zero. Like yesterday, it happened. Like CRISPR, it went up to only first target and came back. You know, so when you have one lot, that's an issue. Otherwise, if you're having multiple lots, that's not an issue. So you can just think about this idea, because this is what even I was also suggesting, and you can also keep your stop losses carefully. Mainly, what happens is we plan it well, but at the time of execution it's very difficult, because at the time of execution, either the system is not able to take the order, or we are busy at the time of booking our profit, or we are looking into some other thing. This is what happens. Like yesterday, somebody missed to exit in CRISPR. The reason was he was looking into some other stock or looking at exiting some other stock. So the target came and went away. So he could not exit. That is what he was sharing with me. This is what happened to me. So these are practical issues which everyone go through. So that's a common issue. So this session, let's keep it more interacting, as we are here. Myself and Naidigar also joined. We'll be able to give you some understanding on what you're looking at. Every week, what we are doing is we are trying to, give the sectors, every week, because most of the times what happens is, if you're stuck with one or two stocks, and you always keep watching only those stocks, but in the current week or the next week, what happens is the focus might be in fast moving consumer goods, consumer staples, consumer discretionary, or sometimes there is a focus in financials, and the market is making all time high, and your portfolio is just standing there. So that's one of the reasons why every week we are trying to give an update about what are the sectors which are in focus, and what can happen in these sectors in the going forward, so that you can have your own stocks, or any stocks which are from the top gainers, top losers. Take those stocks, and then you can trade for that particular week, even if you're a swing trader or a day trader, doesn't matter.
No, actually, that's a very good point, Vinod Garu. See, what happened, we were all trying to bottom fish these beta stocks. And I think banking and, some of the clothing, retail, and hospitality, all those sectors actually shooted up, but we weren't focused. We were only trying to see excited about the correction happened in plugs and all these kind of things. We were only focused on this while they were shooting up. A very good point. Thank you, sir.
Yeah. What you can also do is, since when I'm giving out your sectors, everyone, you can also use this website. I'll just give you. So what you can do is, since this is going to be a long weekend for you, some Monday also is a holiday for you. What you can do is, since the sectors are very clear in this particular site, when I go to this, you can see the S&P sectors. This weekend, discretionary, staples, energy, financials, healthcare, industrials, infotech, materials, real estate, communications, and utilities. Okay, you take down a couple of stocks from each sector. Make a note of it in your book or in your watch list. Keep a watch list. You can also use your mobile or your trading platform, create a watch list for yourself. Each sector, each industry, top companies or the best companies you're comfortable with, fundamentally good companies, make a list of them, keep it on your mobile on the watch list. And whenever you might not be having time to check each and every sector, but we generally do it every week, most of the time. So you can look into those sectors, select those stocks from your watch list, identify a simple way of, I can give you a simple way of trading. For example, let us say Duke Energy. Okay, let's say this weekend we said energy stocks are going well, and Duke Energy is there on your watch list. Let's say that. So what you can do is, like, whenever the stock, if you're doing a day trading or a positional trading, whenever a stock, if you're doing a positional trading, whenever the stock, the previous high, the recent high, if it is crosses and closes with volume, that can be a good idea to consider buying and keeping a stop loss somewhere, for which you can also use your trading platform, conditional ordering systems. You can keep your stop loss and then go with your work. I think sometimes that is really working well, and especially when there is some news in that particular stocks of that particular sector, it's going to be excellent. For example, SPC was one of the recent excellent move the stock has made. So when there is a good news and the stock is battered badly, and those are really doing some options, you can take 1 year long options, consider trading them, so that your risk is defined. Let's say, for example, I'll just give you this example. Suppose if I'm doing SPC, and when the stock is, let's say, somewhere at $20, okay, somewhere at this particular case when the news has come, okay, if I have to buy 100 units here, it is going to be $2,000 for me. If I buy an option of 20 call or something for 1 year expiry or 6 months, 7 months expiry, the premium will be hardly $500 to $600. You just buy that option, leave it for 6 months. Within 6 months, even if it reacts about 10 to 20% upside from the current levels, it's going to be a good profitable scenario for you. Rather, I mean, those who are doing day trading, you can just take that week option and then take a trade. But otherwise, it can be easy for you to work on a longer term option basis, which can be good for you, instead of taking a risk of putting $2,000 and then you're busy with some other thing and some bad news comes and the stock falls and you don't know what to do with that stock. That can be one better solution, is what I was looking at in this particular scenario. So day in, day out, you can also see, even you can use the TradingView website. There are a lot of gainers, losers provided here, volume gainers, gap up gainers. So many stocks are being given here. They are given on the, what do you call, websites like NASDAQ website and CNBC website. You can go through them, observe them, find out them. And there are a lot of fundamentally good companies. You have Alibaba, you have Royal Caribbean Cruises. You can consider those stocks, look at them, keep focusing on those stocks so that you can consider taking the trade. And one thing is, you need to know the levels. One, now let's say you don't have technical knowledge, at least you can take some chart of this weekly chart or monthly chart. Just take a chart and then see what is the recent high from where the correction has taken place. Just mark that level, make a note of it in your book or on your mobile. Then, whenever the stock reaches that level, you try to book your profit and come out of it. Or whenever the stock is going down, note down the recent support from where point from where the stock has gone up. Note that point very near to that, you can start buying that stock, so that you don't have to worry too much about technicals when you're not having that learning or understanding of that. You can use these things for your regular trading purpose, and then find out your entry levels. Rather, we are trying to share a lot of trading levels for various stocks in different scenarios. Like we were saying, airline stocks are doing well. So even your stock like Boeing was doing well. It went up 5 to 6% in just 1 or 2 days. The levels were very clear, and when the stock crosses those particular levels, you can consider taking a trade or placing a what do you call stop loss buy orders or stop loss sell orders. You can also go through that ordering system from your trading platform, whether you're using Fidelity, E-Trade. They'll be giving you automation of ordering systems. You can use them and then go for the trade. So right now, how you people are just taking a decision to take a trade? Those who are not following charts, or those who are not following the what do you call options or any technical thing, how are you generally taking a trade to identify opportunities?
So I personally, I actually happen to cut down, first of all, a lot of trading activity. And
Okay.
yeah, and if I'm taking a couple of trades, say if I take 3-4 options, first if it is in profit, I'm closing 2 of them, similar to the targets that you mentioned. And one thing I'm trying to do is I'm basically depending on the first of all, the charts basically setups. If it is first of all, if the overall market, so far at least I felt the market is actually moving in the direction, in the sense in the range, right, like basically bottom to top. So when I see that in the bottom range market I started acting positive, then I'm taking some of the things that have, for example, were acting better, in the sense they were actually above certain averages. My favorite is the squeeze. Like if there is a big base pattern, and then if it's trying to squeeze, I really like those, and they usually rewarded me good. That's what I try to pick. If not, but the ones that we know of, for example, all the squares and all those things that we regularly follow, I just go by the market trend, and then the particular setup of that particular stock. Basically, if it is moving from the 50-day or 20-day positively, try to take those. That's what I've been, because the kind of market that we are in, it's becoming really difficult.
True.
So I also wanted to pick on you. Like, how are you picking? Like, your picks have been great. First, let me say this. The CRISPR, or especially SPC, the timing was excellent, and they really worked, right? So what was your criteria in picking up those? Like, why did you choose SPC out of so many, right? Because there are so many beaten down. For example, there is skills, there are so many other things. For example, workhorse, there are so many beaten down stocks, but you happen to pick SPCE. I don't know if there was any news. I was not following any news. I don't know if you were following the news. I wasn't sure, but I was just curious to see your thoughts there.
SPC, basically, I was waiting for some sort of announcement which was expected in May. And
okay.
The chart also was completely at the bottom. If you take the chart, because one thing is, most of the stocks, if you see when I open it, there'll be a lot of homework I would have done. Suppose now today, let's say in this particular group, some people are inquiring some stock. Okay, while explaining itself, I set up all my levels. And after the session also, I try to find out what are the additional things which I missed during the session. And then I try to keep these levels, which are generally saved on the chart. And
Okay.
whenever I keep scanning, like when I open the charts, if you see, there are only few tabs open here. That is, one is for the fundamentals, other one is trading view, other one is e-trade account. But generally I have about 10 to 15 tabs open with 10 to 15 charts, 10 to 15 different charts of different sectors. So when the chart is open and the levels are very clear, all the levels are already established on this particular platform. When the stock is, reaching some critical zone, okay,
Mm-hmm.
my point is like whenever the stock reaches some critical zone, there two things happen. One is there can be a very bad news. Two is there can be some good news.
Mm-hmm.
Three is there can be some institutional buying taking place. Now here, if you could see here, though the candle is red, I'll just zoom this chart. Okay, though the candle seems to be red, that is, weak, but if you could see, the volume is higher compared to the previous candle. That's an
I see.
indication that, at the bottom there is a huge buying that has taken place here and closed at a higher level than the bottom. If the volume is really heavy selling, then the price would have been very weak and closed below this support. And this
Mm-hmm.
support is these are not normal supports, these are strong supports. That's the reason why I put it in dark color. So when it comes here, I become very alert. When I keep, scanning various charts like this, when I keep scanning, I find that something will happen here, something will happen here. Immediately I go to the daily chart or hourly chart and see what changes are taking place. Then
Mm-hmm.
when I start seeing it, and if it is supported with more news, I'll also be more comfortable. And this, in addition to that, if it is very near to the expiry of the options, I become alert, because the options will be very cheap, very, very cheap. Like weekly options, they'll be very cheap. Wednesday or Thursday, the option premiums will fall down. And what do I do is, if I'm not clear about the direction, I buy a call, I buy a put, because my premiums are very, very low. My risk is hardly $20 to $50 per lot. And if it works out well by expiry, my premium, the call premium and put premium, minimum goes twice or thrice the premium what we pay. This is what happens by end of expiry. If you have seen in the case of CRISPR yesterday, from 2 days we were waiting for the CRISPR to go higher. Exactly on the settlement day, it went up.
Yeah.
That's where the timing is important. When you know the timing, when you keep doing these observations, then you'll understand that, we
Mm-hmm.
need to be alert and active. So I leave other jobs and keep focusing on this and start seeing how we can take a trade here. And then I start looking on options so that my risk will be lower. I can't do 5 to 10 trades by buying, 100 shares of 5 stocks. Then my risk will be, even if two works, other three fail, my investment will be in trouble. If I take an option, my risk is defined. So I don't have to worry even if I do 5 trades. So that's how, I look at it. Second is, I keep watching whenever it comes to critical level. Is there any news? Is there any news? I will try to search that also. Otherwise, I'll see the option data and say, okay, people are picking up this. The open interest is very clear that stock will go up in the next 1 week. That's what is the expectation as per the option chain. Then I start looking at that, even if there is no news, and then take the trade. Generally, I'm not in a hurry to take a trade. I'm just, if you would have seen couple of times, I for 2 3 days I just keep quiet. And when I see that, nothing is happening, I suggest everybody stay away from the market. Nonsense market. It's no use, keeping on working
Yeah.
on some trades, because for the heck of it, we should not do those things. We should just
Correct.
keep silent and keep observing. When the opportunity, and when the opportunity comes, what happens is you're stuck with some other stock and you're not able to come out of it nor make use of this opportunity what is market is providing us. That's why, stay away from the market when it is not clear. When the opportunity comes in, jump and pump, and then, make the trade fast and make a lot of money.
Agreed. Agreed. Yeah. Yeah. Because same thing happened, when stock is not moving. For example, what I was observing was Amazon was like, between 3,200 to 3,350. So when it moved to 3,200, what I thought was I bought, January 25th call,
Okay.
just hoping that they would pump into again at least 3,350 or something like that. But
Okay.
mistake I made is I bought out of money like 3,500. So
Okay.
all they are doing was for last 2 weeks, they were only zigzagging like a $50 range, like all it was going maximum is 33.80 and then bringing down to 33.30. So while the stock did not go anywhere, I lost 50% of the value on the option while I was counting on the time. It's a horrible mistake.
You bought it.
And-
Huh? What you should do is when that direction is clear, immediately sell lower strike call so that it will become bear call spread. Let's say you bought
Exactly.
3,500 call, it's getting into loss, and you're sure that the stock will go down. Sell 3,450 call.
Okay. No, but
So
the
what will
problem is
happen?
they are not taking down much. Every day it is just $20-$30 here and there. For Amazon, it's pretty common. On a given day, it could just put up 50, 70, 80, 100. So I was just doing the playing game, which is bad actually. So so I actually I have a couple of more questions, Vinod Garu.
Okay, if others have any doubts,
I'll wait for others to if they have any questions. Yeah.
If you have any questions, we can take. Otherwise, we can continue with the same doubts.
Okay, I'll let others to continue if they have questions. Then otherwise, I'll continue. I'll ask my questions.
One thing you haven't talked about is selling puts, and is that from what I'm reading, right? That is a good strategy as well. When you know where the stock is headed.
Sure. You can. For
you
example,
can give us a help.
For example, let's say Amazon. Okay. Now Amazon is taking support here and started going higher. You are the clear indication that it will not go lower. So what you can do is you can sell 3,000 put, or you can also sell 2,800 put to be on the safer side. But you need to take a little longer term put, like maybe July put or August put, so that the premium will be higher. You can make some money out of it. That is what you can do it. When there is a strong support.
Yeah, it is exactly the case I did. Right, I should have done reverse, like out of money calls, because it's not going anywhere. I'm supposed to do out of money, sell out of money calls, call spreads, and just sit out and let the time take care of it. I think the same we could do for puts, I guess.
Yes.
So for that, if you want to take longer term, then you cannot take a naked one, right? Where otherwise they will.
You cannot take a naked one. You should sell a put. Let's say you're selling 2,800 put. What you do is you buy 2,400 put or 2,200 put. Okay, but just check the delta. Delta means like, for example, if I'm taking 3,200 put, check out what is the delta. Here, delta is 42. That is, for every dollar movement in Amazon, you will gain 42 cents for every dollar rise in Amazon. That should be considered. So that means if you're expecting Amazon will go up $10, that means you're going to make $4 profit. Then you take lower put whose delta is very less, maybe 0.1 or 0.15 delta. Then what happens is when the market goes up, this put will give more money, this put will take away less money. So net you will be in profit. And if it suddenly falls down also, no problem, because your put premium is so high that it will try to minimize the risk, and you're having another lower side put. So that put will start giving profit. This put will take away profit when the stock is going down because you sold the put. That you should do it when you're, like, for example, recently when maybe a Lemonade was at 60, or maybe this particular what do you call CRISPR was at 100. I was actually suggesting, instead of going and selling put and creating all this confusion, what I was suggesting even to the existing students in that annual support program is, now, for example, you have a Amazon best support. You can see it's very clear. Even somebody who doesn't know technicals, doesn't matter. You can just see from 2,900, it went up once. Again, from 2,900, it went up once. Again, 2,900, it went up once. So there is a 3 times. Now, let's say the stock is going down. First, what you need to do is you buy the put now itself, because it will be cheap when the stock is here. Maybe you can take 3 months or 4 months expiry put. And when the stocks comes here, either you book the profit in the put or use the put as protection and buy in cash. So that what happens is the stock falls and you buy the stock in cash. When it goes up, you make money. So if it goes up, let's say $50, okay, let's say $10 it goes up, you make $10 profit in the cash position. But put, you will not lose much because already it is in some profit. It may come to cost to cost, or maybe the put will take away little money, not much of the money. This is a safe strategy for most of you. If you plan it well, manage it well, it will be very, very useful. Rather, I am doing the same thing. For example, in QS, I was also having QS, but when I bought QS, I bought January put of 25 itself. January put of 25 itself here. So when the stock was falling from here, I realized I made a mistake and the stock is falling. So when it goes bottom till from, let's say 50 to $25 loss for 100 units, there'll be $2,500 loss. I was confirmed. Okay, when it is going down, very good. I have a put. That means my loss will be locked at $25 because I already bought a put. When I bought the stock, I bought the put also. And the put premium, I will earn in the next 6 months, because mine was December put. That premium I can earn during trading by every day QS moves around $2 to $3. I can earn that $5 premium in a span of 6 months at any cost. And when I was clear that the stock is falling, I'm going to enter into $2,500 loss when it goes down. That I was clear. So I did not sell my holding. Rather, what I did is I sold slightly out of the money call of December. So there I recovered a lot of my loss. There I recovered a lot of my loss, and I did not want to concentrate on QS. For me, what happens is I need to keep track of market also. So I can't just keep on observing my one holding and can't avoid others. Whereas in so many others case, what happens is they keep on focusing on their stock only because they are getting into loss. I lock my loss, I adjust the position, and sit quiet. I'm prepared for some $500,000 loss, and then keep looking at various other opportunities. That is what generally I keep doing it. So that actually has saved me a lot without getting into serious thing. But one thing is, whenever you investing, try to invest at least 100 units of any stock. 100 units of any stock. If you remember, I don't know, some people who are there in the annual support group, AMC, at $11, I suggested, hold it. Now today it is $36 was the highest today. The risk was only $500 when I suggested. Because what happens is, don't argue, don't debate that Reddit squeeze is there, this news is there, that news is there. To hell with the news. For us, opportunity is important. What we are doing is, we are locking our loss for 1 year and then waiting for all these rumors to take action on the stock. And when the action goes up, take some profit out of it. You may not be able to wait for the total move. It's very difficult. Maybe some profit you can easily make it without your intervention. If anything goes wrong, by end of 1 year, you have committed your loss of maybe $500 or $600 on AMC investment. But when it goes perfectly, then you are in a very good profit. This way, if you plan your trades carefully, it will be useful. Okay. So anybody else? Subha Garu, Balaji Garu, RP?
No, Vinod Garu, no questions.
Okay. Are you already into trading?
Yes, yeah. Not into options much, but regular investing.
Stocks. Okay.
Hi, Vinod Garu. This is Shiva here.
Oh, hi, Andy.
Actually, so I've been watching for stocks, but every day, the entry point that I am not able to. I saw PLTR falling to 17, and I know that 17 is its somewhere around 17 is its low, but don't get enough courage to get into that, watching that decline and all. So is
Yeah.
there anything, I mean, yeah, but I saw it hitting 17 2 times, but I on that particular day when I see it, I get scared to enter because I have this fear of it may fall down the moment after I invest. So what? And also, I see the CNBC news and inflation fears and all these news contributes to that. So how do we decide like? So this is the, I mean, perfect range where we can buy. So
One is you can see multiple, supports, whether, in the last 1 year or 2 years, what is the best price level from where this particular stock has gone up a lot. That can give you some idea, but you need to have some knowledge about technicals. Some knowledge about
okay,
technicals can give you some better guidance about these things. For example, if 17 you have already seen multiple times, what you can do is you can buy small quantity. You don't have to buy,
okay,
see the amount what you can comfortably wait for some time without worry much about that investment. You can do some small quantity. That is one method of doing it. Second method of doing it
yeah,
is buying and keeping a strict stop loss. Maybe let's say you're buying some good quantity here at 1750 or 18. Keep your stop loss somewhere 2 to 3% or 5% lower, and you can what do you call, you can place your stop loss order for 1 year, 6 months or 1 year, whatever your platform provides you that facility. You can keep the stop loss in ahead of, you know before the stock goes down. You can just keep your stop loss, and when the market really goes down, then your loss is booked and you're out of the stock. So that loss, you
yeah,
be prepared and take a position. Third thing is, like what I said, is when the stock is going down and you're sure that market is also bad, it will go to $17. I'm sure it will go. Then what you can do is you can 6 months or 1 year ahead put of $17. You can buy when the stock is falling, and when the stock
okay,
falls, use the put for your protection, and then buy the stock, so that if it goes further down, your put is there, so that you don't have to worry that it will go to zero and you lose all the money. You may not lose. You may lose
oh,
maybe $2 to $3 per unit. That will be the best possible
yeah,
solution for you. This is always, this is always the way. That's the reason why when I keep suggesting people, I keep telling market is falling, pick up the puts, pick up the puts, pick up the puts now itself. So when they buy the puts and when the stock really comes down, the put itself is in profit. You can book that, or hold the put as it is and buy the stock,
okay,
because put premium rises when the stock price falls. So
okay,
if the stock price is falling further, your put is premium is increasing, you're making profit in that put, and your investment, which is going down, that is giving you loss. At the end, the loss may not be linear in terms of the price fall.
yeah, got it. Thanks, sir.
Yeah, thanks.
Hello, Vinod sir. I joined a bit late, so I don't know how much I missed your the discussion. Would you be sharing this conversation later?
Yeah, sure. We'll be definitely sharing this conversation. I'm already recording this session also. I'll share it in group. In which group you are in?
Stocks and
BS stocks?
yes.
Okay. I'll share this link there. I'll upload into the YouTube and then give that link to all of you.
Okay. Thank you.
Thank you. Naidu garu, anything you want to say?
Yeah, not much, Andy. Yeah, in case if there is, see, the idea is for the last 1 year, we have been supporting almost more than 100 plus people so far, whom we trained in the US market. And recently, since January, what we have started doing is not only just coaching and leaving the people. We thought we will also support on a daily basis using the WhatsApp group as well as the weekly calls. And majority of the people are able to benefit from that system, because it's very, very important to have the clear knowledge, because there is a lot of money we are putting at a stake in the stock market. And without knowing the subject in depth, and playing with the stock market is little risky. So what we are basically teaching is not only the entire technical concepts we are teaching, also we are actually helping with the day-to-day support and hand-holding, reviewing their portfolio, guiding them in very, very closely manner. And whatever that money they got it even 10x of the return. So if anybody is interested, we are happy to handhold them, explain them in detail, teach the entire technicals, and make you a self-sufficient person in handling the stock markets. That is what briefly me and Vinod Garu has been spending last 1 year in the US market. Now we are only increasing the support. Yeah. In case if there is any questions related to that, happy to clarify those.
Hi, I have a question on this.
Please.
So if you have 100 plus people, how your guys are able to support at, because we have only 8 hours of window trading time, right? And do we have other teams also helping?
It is not one-on-one support. Basically, the way we do is we first make sure everybody go through a course of 10 hours of program. So they understand the most important 5 concepts of the stock market, which is the trend, how to identify the trend of the stock. First of all, how to choose the right stock. And then what is the support and resistance levels, Fibonacci levels, like the way we are showing, and all the option chain reading. So we basically teach all the concepts first. So the 10 hours program will go through, they go through entire concepts first. So they are aware of the whole thing. On a day-to-day basis, whenever they have a doubt, we have a WhatsApp group where they will post a question. For example, can I buy, let's say Amazon at this level? We look at the stock, because they already know how to really understand the reading the chart. So they will able to know how to understand the stock, reading the chart. And we will also review the stock based on the current situation and guide them whether is it the right time to look at it or better to wait some more time. On the regular process also, whenever we see an opportunity, when on any particular stock, like we said, we're given multiple things, we say, hey, we see a great opportunity in this. If you're interested, please understand the knowledge what you already gained. See if you also feel comfortable, please take this trade. So that is how we are actually supporting the entire team. We have people of 50 people on our group, on our annual support group, and that's how we are supporting it.
So is there separate fees for monthly and annually?
So it's just basically we are doing an annual thing which is combined, because unless you are clearly know the subject once at least, because that's a lifetime learning skill, unless you really learn at least once the whole concepts clearly, it is difficult to explain on a day-to-day basis. If I'm giving a trade, you know exactly our mindset, our approach, our thought process, our rules of the game. So you would able to successful at least a year. So that's how it is. And the money, whatever you are investing, we are very, very confident. We have, you can talk to anybody. That is actually even recovered in one trade or 1 or 2 trades, or within the first week itself or first month itself. So money, whatever you're investing on this is like a peanuts in the process, because you're learning the skill which is for a lifetime or a lifelong skill, and you are not going to make mistakes at least. That's what our goal is to support it. So that's the advantage of this entire process. Does it make sense to you, or you have any questions on that?
Sorry, I wasn't good. I got it. Thanks.
Yeah, thank you. Yeah. Because whatever the Vinod Garu is telling today, we teach all that concepts also to you. So that way, tomorrow, whenever we are talking about any particular trade, you also understand. It's not something rocket science, right? It's just a matter of time to learn something, and we need to apply those skills. And it is all about decision making, the amount of money you are investing, the risk trade you take, all of that factors matters in making money. But at least you are not going to do something which is blindly call or based on certain news, which is more of a blind call. Here we are going based on the technical analysis, and based on that process, you are taking your trades, buying or selling. Whether it's a trading or whether investing, the rules are same. It's just a time frame what you look at it.
Hello, Naidu Garu. Hello, Vinod Garu. Thank you for doing this for the group. This is Raghu. So I don't, sometimes I mean, as others have indicated, during the work hours, during the market hours, I don't have time to go through or immediately act on whatever is sent in the WhatsApp group. So do you have a list of stocks? I mean, my mind goes like the mutual fund way, where do you have a list of stocks that you say that, okay, guys, whatever you do, try to operate in this list of stocks, and then on a weekly basis you review that entire group of stocks and say that, okay, exit now or put more. Is there something like that, so that for folks like me who cannot spend day-to-day or hourly basis, and we can have a 1 weekly review of the portfolio and then be benefited out of this?
Actually, most of our guys are like you only. Only I think maybe 20% of them can spend time during market hours. Otherwise, 80% of them are like you only. So what we do is like, we keep giving some ideas about, for example, on 13th March. Okay, we said that buy AMC between $5 to $11, 100 units. Hold it
I
for
see.
1 year.
Okay.
This is given on 13th March. You can see this.
Sure.
We gave between 11 to 5. And yesterday, what was the price AMC? Everyone knows that. Here, what you need to do is the concepts do not change whether you are a day trader or a long-term trader.
Of course.
When you're a long-term trader, you use the weekly chart. Okay. Now you can see the suggestion was given somewhere here in this part. Okay, here when it was at this point, it was given
Yeah.
here, because the chart is very clearly indicates that very good potential going up, because there's a great volume here, and again the stock is going up with the higher volume and going down with a lower volume. So the weekly chart was indicating that there is a very good strength. So I told during this process of cool down, accumulate the stock. And those who accumulated between March to April or May, now you can see it from $11, it has gone up to $36. Okay,
Got it.
so the only concept is you have to use weekly charts. Okay,
Okay.
for those who are doing day-to-day trading, for them, you can look at this way. There are some cases where we have given, yesterday, we have given one call where we said, buy this option, hold for 1 year. Because in US, you also have the facility of doing option. If I'm a day trader or I have full time during market hours, doesn't mean I make more money than you. It is not like that. Somebody who's doing day trading also, you wouldn't have made, double the money in the last 2 months. Day traders also wouldn't have done. So it's only the concept. It needs to be adjusted to yourself. And we have a list of stocks, which we have done identified based on fundamentals. Those stocks, those levels, we generally share it with the students whenever we come across those opportunities. And we have definitely some good list of stocks. And we also keep telling them, stick to only these stocks. Don't get into new stocks. Like, for example, if you have some good stock in airlines, let us say like Royal Caribbean Cruises is one of the fundamentally good stocks. So when cruise stocks are in limelight, we suggest, come on, look at RCL now, because the momentum is very good in the cruises sector. Get into those stocks, because the charts will start indicating that, cruise lines are, when the momentum comes, that doesn't come just one day and go away. It will keep, having that inertia of motion, we call inertia of motion. That motion will take it forward. Only thing is, you need to know the motion is towards upside or motion is towards downside. If you know that, you know how to play it. That you observe in the weekly chart, so you will get an opportunity to how to look at these things.
Got it. Thank you. And then how long is training that you guys give?
So, Naidu garu.
We do over the 3 weekends, 2 hours, Saturday, Sunday, 3 weekends, we finish the entire program. And after that also, every weekend, Sunday, 12 o'clock, we also do the review of the market for the past week as well as upcoming week. What industries or what sectors will be going to perform better, or within that couple of stocks also we take and review the stocks based on the feedback. It's more of a question and answer session every weekend after that.
Okay, thank you, Andy.
And another thing, what also I wanted to highlight is a lot of people who buys the stocks and keep it for a long term. Also, there is a way to make very passive income by doing a call selling, which is concept called covered call. We have introduced that, and we have made at least a couple of $1,000, depends upon their portfolio size, without doing anything, because you already own shares, which is not going anywhere. You could sell a covered call, which is a little longer, and make a decent revenue, which also will act like a hedging process. So that kind of a ways we kind of introduce, and we kind of work with the people and make sure they make that extra money in this process also. A lot of people, they have not applied those concepts. And that is one of the learning we've seen after working with so many people.
I see.
Because even though you might have $100,000, $200,000 portfolio, but you can easily make $3,000, $4,000 every month without doing anything, just by doing, which is a very safe investment or safe return money. Those kind of ideas we work with you and make sure you learn those concepts and apply for it.
Got
And
it.
we share all the videos on the topics and also the discussions what we have, and also every suggestion, every idea, whatever we give, we make a explanation why we are doing it. For example, we traded SPC last week. So why did we give this trade? That also we explain why we are doing this, why we should take this trade, what is the reason. That will give you confidence. If I say go and buy SPC, you may not get that courage or confidence. So when I give a suggestion, what is the basis for that suggestion? Because you already have some knowledge on the concept. When I explain this using the chart, what happens is you'll get that courage and confidence, and then you start getting into it, taking that risk and taking the trade and executing it in a proper manner, so that you make decent money out of that particular trade. And that knowledge will help you next time when such situation comes. Maybe you can look at it independently.
Got it. Thank you.
Thank you. So fine, Andy, we'll just share this recording to all of you in the group, and we'll try to catch up again maybe after some time, so that we can just interact with each other.
Thank you, Virendra. Thank you.
Thank you. Thank you.
Thank you all. Thank you, everybody.
Thank you all. Thank you.